Hi everyone. This is the FZS Forex channel. Follow us on YouTube. Please be aware of the risks of financial markets. The subject of this video is about fundamental analysis. I will first ask a few questions about fundamental analysis. Then I will answer them, and after that I will show you a live trade. And at the end I will give you a small gift. So stay with us. My questions. Do you use fundamental analysis and news analysis in your trades? Do you know how to use them? For example, how does a dangerous disease in the world affect the price of gold? What are the effects of rising gold prices on the US dollar, the Canadian dollar, the Australian dollar, and the Swiss franc? What effect does rising oil prices have on the Canadian dollar? How will an increase or decrease in bank interest rates affect stock prices? What about currencies? What is the impact of the unemployment rate? Let me give just one simple example. Whenever something strange happens in the world, many traders buy gold because of fear of devaluing paper money. This is the first principle of fundamental analysis. Fear in the world means rising gold prices. Do you think COVID-19 increased or decreased the price of gold? If you answered, increased, your answer is correct. No one wants to keep just a paper money in the age of fear of the human future. But gold retains its intrinsic value. So at such times everyone buys gold. Many traders either want US dollars or gold. If the US dollar is attractive to them, they sell the gold and convert it into US dollar. If they think the US dollar is devaluing, they sell the US dollar and buy gold. Price is also based on supply and demand. Anything that is offered too much becomes worthless. And what everyone wants, its price will increase. As I mentioned before, when traders do not like the US dollar, they want gold. Gold price increases. Now we have to see what will happen if the price of gold increase. The purpose is to examine the currency values. I explain very simple. First, the countries which their central bank has a lot of gold, the value of their currency will increase. For example, the Swiss franc. The Swiss central bank has a lot of gold. Therefore, the increase in the price of gold makes the Swiss franc stronger. Second, countries that extract a lot of gold and have gold mines, their currency will bullish too. For example, Australia, New Zealand, and Canada. Third, in general, whenever the value of gold rises, the value of the US dollar will fall. Why? Because traders spend their US dollars to buy gold. The supply of dollars increases, so its value decreases. Demand for gold will increase, so will its price. However, this cannot be confirmed with 100% certainty. But it is visible in the majority of the market. Another point about gold, money printing is also one of the factors that devalue money. When governments print money, they actually devalue their country's currency. And you know this devaluation of money as inflation. Which, of course, is not a bad thing. However, the fact that you see gold prices rising, in general, is due to the devaluation of money, not the appreciation of gold. For this reason, many traders are not interested in short positions in gold. Let's finish the gold topic and move on to oil. If the world's industries are active and the need for energy increases, the price of oil will increase. Countries that export oil will have more valuable currencies. For example, the Canadian dollar. I hope you understand the generalities of these cases. Let's talk about interest rates. Suppose your country's bank offers a high interest rate. What will happen? Most people put their money in the bank to make a profit. So the amount of money from society decreases. When the amount of money decreases, its value increases. So a higher interest rate means more value for that country's currency. Now suppose interest rates fall. This means that if you put your money in the bank, you will receive a small profit. So it is not worth putting your money in the bank. Therefore, you take out your money and put it to a more lucrative job. Many people also borrow from banks. Because lower interest rates mean that they are going to give less interest to the bank. Borrowing is affordable. As a result, the amount of money in society increases. Then the currency becomes weaker. So the value and strength of your country's currency go down in this case. Well, suppose the amount of money increases in society. Everyone wants to buy something. They buy rudely. So corporate profits go up. And even the price of goods may increase due to high demand. That means, inflation is also rising. But whatever it is, many companies make a profit. Their customers have increased. When their profits increase, so do their stock prices. So in such a period, it is better to enter the stock market and buy shares. I will summarize. If a country raises its interest rate, it means that the value of its currency increases. So it is better to buy the currency of that country. If a country lowers its interest rates, the amount of money increases in its society, so it's becoming weaker, and corporate stocks increase. So it is better to think about stocks. This is not always true, but you get a general idea. News about interest rates is one of the most important fundamental news. Its changes cause a lot of changes in the value of currency. Another important news is the employment rate and the unemployment rate. Whenever employment increases, it means that the country has a growing economy. Therefore, the value of that country's currency increases. Whenever jobs fall, it means the country's economy is weakening. So the value and strength of that country's currency decrease. Basically, whenever you see a country's economy improving, buy that country's currency. Otherwise vice versa. The same goes for stocks. Any action that reduces the cost or increases the profitability of the company, will increase the company's stock. There are other important news that we will teach you how to review and trade based on it in separate videos. Examining such news, examining changes in progress and regression, and predicting the future is called fundamental analysis. Some of these news will have an impact after the announcement in the first moments, but sometimes prices do not move in the direction of news and fundamental analysis. Why? For several reasons. 1. It is possible that many traders predicted this news and traded based on it long ago. Nothing special happens after the news. And the opposite may even happen. 2. When the news is announced, the market excitement is very high and many people act emotionally. Some may even misinterpret the news. In general, when announcing the news, the price moves in any direction for no reason. For this reason, it is better not to trade half an hour before and after the announcement of the news. 3. Sometimes big banks try to deceive others. First, they move the market against the news, then they use the fear of traders and make a total profit. 4. For any reason, the news may be irrelevant to traders and they may not react to it, even if you think it is important news. 5. The news may seem good, but traders for whatever reason do not consider it good news. For example, reduce unemployment. This is good news, but traders may still consider it a high number. 6. And all the other reasons that I am unaware of. I want to tell you a secret. But before that, please like this video. Also, subscribe to the FZS Forex channel. We have all heard that prices move because of the news and the fundamentals. But this is just the beginning. Price starts to move because of the fundamental reasons. But no one knows how far it will go. The price moves for a while. Then some people believe that the price has changed a lot, so they trade against it. Then others do not consider this price change correct and enter into trades to make a profit. This difference of opinion causes the price to go up and down, like a game or like a war. As a trader, it is better to trade only in the direction of the main news. If the news says that a country's currency will become stronger, don't go for short positions. The entry point, take profit and stop loss prices can be determined by price action or technical analysis methods. Many times, there is no important news. You can still trade. Be either a buyer or seller. Let's just see which team is stronger and join them. Buyer's team or seller's team? Which one is stronger? Identify important areas and lurk there to join the stronger team. Fundamental analysis is very complex. I do not consider myself a fundamentalist analyst. But I follow the important news. And if I see important news, I will not act contrary to my fundamental analysis. For example, if there is news that the US dollar is strengthening, even if everyone shorts US dollars, I will not be a seller. On the contrary, I will think about buying at the right place. or if I do not consider the market behavior appropriate to buy, I will not enter the trade at all. No matter how tempting the price moves, I do not trade against the important news. When there is no specific news in the market, I will be with both the buying and sellers teams just to make a profit. Of course, the news of a few days ago may still be influential. I am not unaware of the news of the previous days. This tutorial is enough for now. I want to show you a live trade based on fundamental analysis. In the news, I heard that the President of the United States has fallen ill and has been taken to hospital. We are traders and we have to make money from important news. Can you tell us what effect this news has on the value of currencies? US dollar. It would not be good news for a country if its president falls ill. Because weird things can happen, I prefer not to keep the US dollar. So many traders want to sell their dollars for fear of the future. The supply of the US dollar will increase. So the value of the US dollar will go down. Gold. It is considered as a safe currency. So traders buy gold. So gold will be incremental. Swiss franc. This currency is also a reliable currency like gold. Now let's investigate about currency pairs. Gold, USD, or gold to the US dollar. Gold rises, US dollars fall. So I expect this currency pair to bullish. US dollar to Swiss franc. The USD dollar fall, the Swiss franc rise. As a result, this would be a bearish currency pair. Euro to US dollar. This currency pair also behaves like gold to the dollar, so it will be incremental. However, such calculations can be performed for each currency pair, but I prefer to trade major currency pairs. I also prefer to choose the currency pair that has the best chart in terms of technical analysis or price action. In previous tutorials, I taught one of the best trading techniques. Please find and watch it. I traded gold today. Although US dollar to Swiss franc and euro to US dollar also had good opportunities. Well, let's get to the prize I want to give you. Consider a day when the definitive news of the COVID-19 vaccine arrives. Can you tell me what currencies do you buy or sell? Buy means long, and sell means short positions. Traders will have more confidence in the future. So they do not need to keep their gold. So they sell or short the gold which they bought for uncertainty about the future. The price of gold is coming down. Let's not forget that many people bought gold just to avoid chaos and uncertainty in the economy. Also, the value of the US dollar goes up. Remember we said that the Australian dollar and the Swiss franc are directly correlated to the price of gold. So these are likely to decrease. The most important pair is euro to US dollar. It will probably decline. Why? As I mentioned before, there is no certainty in the fundamental analysis. Therefore, combining it with technical and price action methods can have the best results. This tutorial was only an introductory video. If you are interested in these topics, follow the FZS Forex YouTube channel. Thank you for supporting us.